Hello guys, thank you very much for coming again. See, there's a bunch here. Well, not a bunch, but got a handful of guys here. So thank you very much, and girls, if there are girls. Thank you very much for joining me. Can everybody hear me? Okay? Is everybody in the Discord? I think there is a slight delay. My internet's a lot faster this time around, so the stream should be a lot more stable. But we are still sending data to Europe and then back to South Africa, so there is a bit of a delay, so I'm sorry about that. But yeah, things should be cool. I hope that you have all had a good week. I should introduce myself. My name is Petri Redlingeys. I am doing a series of hopefully informative educational type videos, and we are basically just doing this to, I don't know, spread the love. So if you look in the link below, or not the link below, the stuff below, there is a link to a Discord channel. You are welcome to join the Discord channel. I encourage everybody to interact with each other in there, share charts, share ideas, form community. The idea is for us to support each other and learn from each other so that we may become better traders. So the focus of this evening's thing, I'm going to change my little thing to the center screen. So yes, okay, it's what do you call this program? PowerPoint. I can't get it to do like a PowerPoint presentation because then it makes all my other screens black and then I can't see what's going on, which is terrible. And I don't know if it's what screen it's showing, and it's just a nightmare. So you guys are just going to have to deal with the fact that you can see the raw inside workings of this sexy PowerPoint program. It's just one of those things. So I'm going to get straight into it. Let me see. All right, I'm going to get straight into it. Tonight we are going to cover two different things. The first thing I've put on the wrong side, believe it or not. So I did it to compensate for this fancy area where my head is. But I see now that it is somewhat different. But anyway, whatever. So we're going to be talking about support and resistance. Ultimately, the idea is to come up with a way or to understand how to trade trading ranges when securities range in a or the price of a security ranges in between two prices. There are opportunities for us to take trades either long or short in those trading ranges, and in order to do that we have to first understand support and resistance. So we're going to be looking at support and resistance. I put in here channel support and resistance. Unfortunately, we are not going to be covering that. My apologies. We're only going to be looking at horizontal support and resistance. It is the most important and most powerful version of it anyway. So it is, I think, important that we cover just that, and also we have limited time. So then we're going to be talking a little bit about different time frames and why they're important when talking about support and resistance. We'll get to those a bit later, and then managing risk with these trades, and then taking these triggers, right? So these are the various things that we will be talking about tonight. And then later on, we'll also look at keeping track of your trades. Obviously, you have to keep a bit of a record of the things that you do, the decisions that you make. The reason that you do that is so that you can, see whether or not you're improving, and also keep a bit of a logbook to see, which setups are working, which are not, which trades are doing well, which securities you should avoid, which ones you're making money on, that kind of stuff. So I've got a template actually for you guys that I will put the link up at the bottom of this video. When it is done, I need to just share it. I suppose I can use I've got ways that you could just download it, or I will also put it in the Discord, and then you can just get it from there in the, I'm going to put it in the, what do you call this channel, technical nuggets. I'm going to put it in that little under the HCA community text channels. It'll be in there for you guys to download if you want. But all right, let's get straight into it. So support and resistance. I'm going to zoom in a little bit on this thing. Support and resistance. So what is support and resistance? Support and resistance are two prices or levels on which at which prices reverse, right? So if the price is going up, it reverses at a certain price point. That is resistance. It comes back down, it finds support, it reverses again at a certain price point and it goes back up, that is support. So basically what you need to think about this is forces of supply and demand. Usually, sometimes these levels are around round numbers. So looking at the chart here that I have, this is Johnson & Johnson. It is an age-old chart, so it is no longer relevant in any way, shape or form other than to serve as an example. But we can see here the support and resistance levels are marked Z, A, B, C, D, and E, right? So every time it reaches this area around the $54 mark, it finds a bit of support. At E, it was slightly higher. And when it comes up here around the 56.50 level, it finds resistance. So now, there's quite a bit of debate as to whether or not round numbers are psychological numbers, so 54 in this case being a big psychological level, or not. Usually what happens is big institutional traders and or investors have certain points at where, at which they are willing to enter into the market. Now, the difficulty here is that it's difficult to determine exactly at which point the big players are willing to step into the market or get out of the market, right? So there's a lot of talk around, should you put your orders on round numbers, should you not? I don't think it really matters. I try to avoid round numbers, to tell you the truth. There was one situation where I had a short position on a stock. There was some news that had come out. It collapsed very, very nicely. I would have made a ton of money if I was 1 rand above the round number. That round number was 3,000. The stock was Nasdaq. I put my order in at 3,000, and there was so much other traffic and other orders there that I never got filled, and I ended up having to to close my short position at a much higher price, which was unfortunate. And had I gone 3,001 rand, I would have actually gotten filled and made a ton of money. But so that's why some people tend to avoid round numbers, and they try to put orders slightly above or below that round number. If it's 3,000 rand, or let's say it is $54, maybe go at 54.01, 54.05, whatever the case is, just to avoid that situation where your order doesn't get filled because you're the last guy in the queue at 54. In any case, enough droning on about that. Support and resistance is basically forces of supply and demand, as I explained, where big institutional markets or big institutional players are entering into the market or exiting out of the market, right? So there are two different ways of seeing this. There is a support and resistance point, and there is a support and resistance zone. So a support and resistance point is a single point, or a peak, or a trough, right? So a peak is at the top of the trend, a trough is at the bottom of the top of the range, and a trough is at the bottom of the range. So to show you here, these are the peaks, A, C, and D. And the troughs are Z, B, and E, right? So peaks, trough, peak, trough. So a single point is a peak, and the support zone is then when there are multiple points, multiple peaks and troughs at the same sort of level, okay? So I'm just going to read out what I have here. A single point, one peak or trough, is where large orders stop price moves. So here it comes up, bang, there's a large order, stops the price move, and the seller comes in and pushes it all the way down to the next single resistance point, where another large order stops the price move and pushes the price up, right? So supply enters into the market at A, and demand enters into the market at B, right? People are wanting to buy it at B, so demand outweighs supply, and she runs up. People are wanting to sell more, there's excess supply at A, and they push it down, right? When you have support and resistance zones, you have multiple points at approximately the same level. So we have to remember, and we all are guilty of this, we draw lines on charts and we want things to be at exactly the right. Must be exactly 52.05. If it is not 52.05, it is not my support level. It's not a double bottom, or whatever the case is. Whatever the formation is that we're hoping for. That is not true. Support and resistance zones are dynamic. And they are not always, they are approximate, right? We cannot predict where a big player enters the market. Today he might enter the market at 54.10. Tomorrow he might come in at 54.02. We don't know, as long as it's in that sort of area, right? So when we have multiple single points in the same sort of price level over a period of time, right? So multiple peaks and troughs where you at the same level where big orders are entering the market. So, for example, Z, B, and E, those combined, you can draw a line there. That is your support sort of level or zone or area, right? And similarly, A, C, and D, this is your resistance zone and or level, right? Okay, dokes. Moving on. Dun, 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 dun. I got that song in my head that was playing while the intro was going. Okay, so how are support and resistance points determined? I'm going to remove the logo. Which one is it? HCA banner. Bye. Okay. There are a number of different ways. The first one is called the DeMark or Williams method. Now, believe it or not, that is its actual name, DeMark or Williams. It's not two different methods, it is one. But basically what that does is it uses the number of bars on either side of your suspected reversal point. Okay, so you'll see here we have a number of little arrows and stuff pointed in. I'll get to those in a second. But let's say, for example, you are looking for a support level, right? So you are using a down bar. So a low bar might look, so on a low bar, you have to look for two, on either side of that bar, on the left and right, you have to look for basically two bars with higher lows than the bar you suspect as your low bar. So example, right? And maybe later on we can look at some real charts and not the textbook examples, which is what this is. And we can look at some different charts, and we can try and identify some of them. And we can do that. You can actually, while we do this, go through some of your own charts as well, and then put them on the Discord, and we can look at them later. That's also a great idea. In any case, so let's use this one. This is a nice, easy one to use here. All right. I don't know if you can see my cursor. I hope you can. I'll shake it so that it gets nice and big there. Right. So this has a low in this bar, and we suspect that it is a suspicious looking support level. So we look at the bars on either end of it, and we look to see whether they have higher lows than this bar. So that one's low is higher than this one, and that one's low is higher than this one. So yes, that does look like a reversal bar. That could be a support level forming here, right? Or a support point, at least, that is forming here. Now, bars and candlesticks are very similar. So for the exercises, or for the purpose of explanation and stuff, we use bars because bars are actually the old school way of doing this. Later on, we can use candles, and I'll show you, how they are pretty much the same thing, really. In any case, so the number of bars can be on either side of the support to resistance level can be increased in order to, increase the importance of this particular level. So if you have, 3 bars on either side, so you have a central bar here. I'm going to shake the mouse again so that you can see it. Come on. Anyway, whatever. It's not getting bigger. That's kind of sad. But this candle here, for example, it has a low, and on either side of it, it has a higher low and a higher low. So that is then our low bar, or our, what we can say is our resist or support point, or the point at which the trend changes. I just want to see here, because my platform seems to have a trading platform disconnected, but the YouTube stream is still fine. Alrighty, okay. Center screen. Cool. So in any case, so I'll zoom in here a little bit for the sake of example. So we have the low bar, we have a lower low on either end, right? If we increase the number of bars on either side of that, that increases the significance of this level. So if you have 3 sort of lower, consecutively higher lows, oh man, this is so confusing. It's 3 consecutively higher lows on the left and right of that bar, then that significance of that particular reversal point is a lot higher, right? And obviously it is vice versa, or the other way around when you are looking for resistance levels. On resistance levels, you are looking for lower highs on either side. All right, so we'll use this one as a nice example over here. We can see that this makes a high over here at around the 57.25 level, and the one on the right is slightly lower and the one on the left is slightly lower. So that is then our high bar and our point of resistance. All right. Now when we string numbers of points of resistance together, as we do on these arrows point out here, that is a confirmed resistance point, lower high, yes. That is a confirmed resistance point, lower high, yes, on either side of the candle or either side of the bar, as is the case there, plus these are all approximately around the 56.50 level. Ladies and gentlemen, we have a support, oh, not a support, we have a resistance level. It's that easy, right? So there is another method. As always, there is the percentage method, and you have to determine what percentage you're going to use before you start looking for these things. And that is basically saying, you know, if we pick 1%, we have to say that if we move down 1%, if the stock moves down 1%, it and then reverses and moves, you know, back up 1%, that is then a reversal point or a support point that we saw. Conversely, if the stock moves up 1%, turns around, moves down 1%, then that is a resistance point. You have to determine the percentage move yourself, unfortunately. Every trader and or analyst is different. And you have to determine it beforehand, and obviously the bigger the percentage move, the more significant the level is. Not a lot of people use this because it is almost too open to interpretation. Another method, the third method I want to say, is called the Gann 2-day swing method. All right, so this is very similar to the DeMark or Williams method, to get it right. But basically what we're saying here is that it takes a low bar or a high bar is identified, and then the following 2 days is observed. So to identify a low or a high bar, you have to have if it's a low bar, you have to have higher lows on either end of the low bar. If it is a high bar, you have to have lower highs on either end of the low bar, right? So you observe that high or low bar, and then you observe the next 2 days, you identify the high or low bar, and then you observe the next 2 days following that. And then you say 2 days after that bar, you have to have higher highs than that of the low bar, or lower lows than that of the low bar. And then you have a confirmed, Gann 2-day swing method support point and or resistance point. So to be precise, right? I'm going to use this example here. We have a low bar, but this little arrow here, the next one has a lower low, so that doesn't count. All right. Then this little arrow that we have got going here, this looks like it might be a low bar and a support level around this 54 level. Let's have a look. We have a higher low and a higher low on either end. Yes, we do. So now we need to observe 2 consecutive days. So we're going to count this one as the first one. So number 1, yes, a higher low. Number 2, yes, a higher low. Okay, cool. That is a support level according to this method. Looking at this one again, we are looking, and remember here, we're looking for just a higher low than this particular bar that we're looking at. It doesn't matter if it, like in this case, for example, we have identified according to the DeMark or Williams method a support point because we have higher lows on either end of our low bar, right? And then the next 2 days after that, we're now observing, and we see that it makes a lower low on day 2 after the bar, but that lower low is still higher than the low of our reversal bar, right, or our support point. So that is still then a confirmed reversal point. I think this is a good time to take questions. I don't know if you guys have any. I'm just going to put this screen back on for a second. I just want to check the YouTube chat. Which is your favorite stock in the JSE? The one that always goes up. I don't know. I don't really have a favorite stock in the JSE. I think one that I probably traded the most is kind of like the Firstrand and Nasdaq, you know. In any case, any questions so far around the stuff? I'm just looking at the Discord here. I see Matume has put in a SA40 index chart, which is very cool. And I don't know what I should call you, IFR Trading, aka Peter, because that's what your name is. It's a very long name. But you have put in what looks like a Nasdaq chart. Is that Nasdaq? Nasdaq March future, yeah. All right, we'll look at those. We'll look at those in a second. Any questions surrounding this support and resistance stuff? Because I know that it can be a little, you know, a little out there. And I don't know if I've explained it well enough for you guys. So any questions around that would be great, so that I can answer stuff. I must compensate for the delay, so I'll have a sip of my coffee. All right. It seems as though there are no questions. All right. Well, that's great. I'm very glad that makes a lot of sense then. Right. So we are going to move right along. So then, how are these support and resistance zones and or you know, levels drawn? I think I should make a general sort of disclaimer or definition, put a general definition in here. A support and resistance zone and a support and resistance level is much the same. We are often inclined to draw them as like just a straight line, and it goes through all the it goes through these numbers, and you know, if it doesn't line up absolutely perfectly, then it is not then it's invalidated, and that is not true. As I said earlier, they are approximate areas, right? So I like to draw boxes on my charts sometimes, because that kind of shows the area in which the sellers are stepping in, or the area in which the buyers are stepping in, and it's not necessarily like this straight up level. It hits 52 Rand and 10 cents and there it turns. Like, it's not that precise. Sometimes it'll go down through 52, sometimes it won't even make it through 52, but in that zone, in that area is where the buyers start coming in when they lift it up, right? As an example. Hey, Byron Latachan, I don't know how to say that. Thank you for subscribing. It's very kind of you. I don't know how many that is now, but I need probably another 4, and I can get my own URL. Anyway, exciting times. So, how are these support and resistance zones drawn? So, obviously, a horizontal line through each of the significant reversal points projected into the future, and you generally use the closing prices. The reason you use the closing prices is because these are the prices that are quoted on the news. These are the prices that people look at when they look at charts, because we are now conditioned to look at what do you call it, the candlestick charts and stuff, but not everybody does. You know, a lot of people look at line charts. A lot of people read the newspaper. That's the stuff that's reported in the newspaper. Closing prices are often regarded as the most important prices, so use closing prices for the most time. When you have a number of support and resistance points identified, and you painstakingly go through this methodology to identify these support and resistance points, you may draw a line at each one of those candles or bars closing prices, right? Or that day, or whatever that it is, day if you're using hourly time frames, whatever. You may find that there are a number of different lines that are starting to kind of like bunch up together. So now you're starting to identify that zone, right? So it might take, so I'm going to use this as an example here. So you might find that here there's a number of confirmed reversal or resistance points, and they all kind of like bunch up in this area, and there's some up here, and there's some here, and there's some here, and there's some here, and there's some here, and you start kind of drawing in a bunch of lines, and they all sort of start grouping together. And then what you do is you use the highs and lows of some of the bars as support and resistance, or as your zone, right? So then you put that in, you draw your box there or whatever the case, and you know that if it enters, you can almost see, especially nicely with candle charts, you can see when the market starts entering into that area, it doesn't necessarily match. Sometimes they close it on one of the lines that you've drawn on your box, but most of the time that sort of pushes it into that area, and then it can't it can't get any further than that. And that's basically it, right? You identify the single points, you join them, and you draw a line that projects into the future, and you may draw it that projects into the past as well, so that you can see how, how significant that is, how many times that support and resistance level has been tested in the past. Now, there's a general rule of thumb saying that the more it is tested, the stronger it is. Some people say it's tested twice, on the third time it breaks. Some people say it's tested 3 times, on the 4th time it breaks. And some people say it's tested 4 times, on the 5th time, and so for infinity, right? It's tested until it breaks, basically. Doesn't matter how many times, whatever rule of thumb there is, I'm not sure that it works, right? It's tested until it breaks. And only a confirmed close outside of that support and resistance area will be a break, right? And or, a failure of that support sort of identification methodology. So if you're using the one of the two methods, the Gann 2-day method, or the DeMark or Williams method, you could potentially see that on a support level like this, you have, or on a resistance level like this, or whatever the case is, you have confirmed, according to that methodology, confirmed points of support or resistance. And then the last time when it comes down and tested, it doesn't make a confirmed point of support. Well, okay, that's your first sign that the support level might not be holding, right? So it's a bit of an early warning system, perhaps. Any questions so far? I'm going to see there is some stuff. Oh man, sorry Matume. I see that you're having some internet troubles there. That sucks, dude. But luckily for you, the video will be available afterwards, so no problemo. I'm just going to once again check the comments. I should maybe actually just move this window. Yes, not for download, Byron, but for you can come watch it. I don't know, you can maybe download it, I don't care. But it's on YouTube, so it'll be here, forever. So don't worry about that too much. I'm checking all different channels of communication here. All right, okay. We are going to move on to actually trading these ranges. So what is the point of identifying these support and resistance levels? Well, so that we can identify trading opportunities. We want to be able to enter into trades when things are trading at the bottom of the range. We want to go long. If things are trading at the top or hitting resistance, we want to be able to go short. So entering at support and resistance levels gives us really high probability entry points into the market. High probability entry points, I'm sure many of you are familiar. If not, I suppose let me know and I can give you some breakdown on that. But basically you're looking for places where the risk reward ratio is in excess of 1:2 or 1:3 or 1:4. The higher that ratio, the higher the probability setup. So range trading or trading the support and resistance levels, for example, could give you very high risk reward setups or very high probability trades where you can take trades that, for every R1 you risk, you might be looking to make R4 profit, which is fantastic, right? So you can have very tight stop losses. And of course, you can also you can trade the break to the ranges. So you can do it 2 different ways. You can trade the breakouts of the range, so that support, resistance, is trading in a range between sort of 10 and 12 Rand. Eventually it breaks out above 12 Rand, you go long, or it breaks below 10 Rand, you can go short. Alternatively, you can trade within the range itself, where you trade the distance between 10 and 12, right? And you take that 2 Rand. Well, you won't get exactly 2 Rand, but you take that and you have a very high risk reward setup. Generally, the breakouts, the risk rewards are rarely better than 1 to 2, 1 risk for 2 reward, as where the trading in the range, the risk reward setup can actually get quite a bit higher. In order to understand that a bit better, I'm going to lean on something that I did in the JSE Power Hour. I actually made a playlist with those, so have a look. So basically it's a concept called a reversal consolidation breakout, right? Basically what you want to do, there's a number of things. I'm not going to get too much into this, but you have here what is called an impulse wave, followed by a pullback and a consolidation. And then that becomes, that can sort of signal a reversal, right? So to get more details on this, either let me know and I can explain it in a lot more detail for you another time. Alternatively, head on over to the playlist, look for I think it is in the most recent Power Hour that I did, where I talk about this and a couple of other things. Or just let me know and I'd love to do a more detailed one. I can drone on, I think I had 10 minutes or something to talk about this in the Power Hour. I'd love to spend like an hour on it, right? So basically, okay, let me just quickly work through it. You have an uptrend, right? And then you have a bit of an impulse wave followed by a pullback, right? So this is your impulse wave followed by a pullback. Then impulse wave, pullback, consolidation, break. Impulse wave, pullback, consolidation, break. So this is your impulse wave, your pullback, your consolidation, and your break, right? Sometimes a big move in one direction, then bigger move in the opposite direction. Okay, oh man, this is complicated stuff. Okay, I should actually skip over this because this is a bit too much to cover here. But basically what we're doing is, the premise, what this comes down to, is you have the market moves in sort of like waves, right? So you have this impulse wave that moves up into a resistance area, and it kind of has a retracement. If that retracement is followed by another move higher, then that's like a consolidation and a break higher, right? If it consolidates and that retracement pulls back past a certain point, that then becomes a new impulse move, right? And you're looking for that. So the example here is basically, you've got this uptrend, it consolidates here, it makes another wave up, it consolidates, it breaks these lows. So now this, because it's now this is your most recent up wave, because this down wave has now, out or broken this consolidation here, or in other words, because it is bigger than the up wave, this is now your new impulse wave. Then it has a pullback. That pullback fails to break the highs here, so this is now considered a pullback. Here's an uptrend, a pullback. This pullback does not take out this uptrend, and then another break higher. Now you have another pullback from this wave up. It does take out this entire move. So now it is a new impulse wave, right? It pulls back. If it takes out this high, it's a new impulse wave. It doesn't take out the high. Instead, it consolidates, and then bang, a continuation of that move, right? So what you want to do is you want to trade those consolidations, basically. When in a range situation, right? So we have a range trading here. You basically have the same thing. These are your impulse consolidation pullbacks that are taking place just now within 2 price points, right? So here you have a consolidation, you have an impulse wave, a consolidation, a pullback, consolidation, pullback again. This does not take out the lows of that, so it is not a new impulse wave. So this is then the continuation of the impulse wave. It gets a bit complicated, but the point is, within the context of trading it in a range, we can use these consolidations as nice entry points. I've waffled on like crazy here. I don't know if I have confused you guys a little bit, so I'll give you some time to ask questions. In the meantime, we're going to look at some examples, right? Basically what we have here is an example of a price. Don't forget about what stock this is, or what the price is, or whatever the case is. Point is, we have a support level at around this 19 Rand 50 mark. Okay, so I've drawn in a nice fancy little support level here, right? As we can see, market kind of trends down into this consolidation and then breaks that consolidation. Okay, if we look at the next chart, we can see that is trading within a range. All right, so I did this whole thing backwards for the purpose of the power hour. I remember that now only, that I put these slides in. So I'm going to start at the back and I'm going to work my way forward. So we have a range here on a particular stock between 19 Rand 50 and 28 Rand 03. Okay, But in order to get entries, and as you can see, this range, this support level isn't exactly perfect. It does break through the bottoms from time. Sometimes it fails to even reach the bottom. Sometimes it breaks through the bottom and it sort of gets back above it, and whatever the case is. And the same at the top, right? But we can identify individual reversal points in this chart. So if we look at this, for example, I'm just going to zoom all the way in here. These candles, for example, there is a low. The low of this next candle next to it is higher, and the low of the candle before it is also higher. So that in itself is a reversal point, right? It's the same with this one. So there are two reversal points at the same thing. Here we have a similar situation. There's a reversal candle, there's a reversal candle, there's a reversal candle, all at the same sort of, or not reversal candles, like bars, low bars, you know, the points at which you can actually say this is an identified low bar. So if you look at this sort of, now it starts to form this range. You've got a support level, you've got a resistance level, and you've got confirmed support and resistance on either end. Basically what we want to do now is we want to now trade this range, right? So in order to identify entries and exit into this particular thing, we switch from longer time frames into shorter time frames. And this is why I was talking about time frames a little earlier. So if you look at this is a daily chart, right? If you then take this daily chart and you switch it into like a 1 hour chart, then those few days that you have here that are all sort of the days building that support level, right? If you look at that on an hourly chart, you can see that in itself is a trading range on just a much smaller time frame. And then a break out of that trading range is then your trigger to go long in the bigger trading range, right? Here we have around your support or your resistance level, we have the market forming another trading range. So this is a resistance level on a daily chart. Now looking at an hourly chart or a 30-minute chart or whatever your preference is, you now have a consolidation or another range, basically just in a smaller time frame, forming around a resistance level on a bigger time frame. When that consolidation then breaks in a direction, or that range breaks out in a direction, that is then your trigger to take the trade in the bigger move that you are trading, right? So what you can see here is this gives you an opportunity to identify this range on the smaller time frame, place your stop loss just on the upper end of that or just outside that range, and put a trigger at the bottom here. So now you have a situation where your reward is that entire move of the daily range all the way down, but your risk is only the move of the hourly range or consolidation that it's traded. So that gives you a fantastic risk reward. You're risking here 1 to make like 4 or 3.5 or whatever the case is, right? And then these are just some examples of how you look at it. So you can even draw that down into like a 5-minute chart or whatever the case is, and then look for that consolidation, look for the break, and then that is your trigger in the bigger time frame to be long or short on the inside of that range, right? Does that make sense? Let me check for questions. Any questions? Okay, are you a technical or fundamental trader, and how long do you hold your positions? Okay, both, I guess. I have a position on what do you call it? Coffee, not coffee futures, but like an ETN based on coffee futures that I plan to hold for the next year or 2 or 3. I don't know. There are trades that I've been in for a few days. There are trades that I'm in for only a few minutes. So it depends really on the instrument. Do you take profit based on support and resistance? Static and dynamic based on news flow? It depends really on the trade. I think you have to identify every individual trade on its own merit. And if you decide to use a technical strategy to trade, then or to enter into a trade, then you must stick to that particular strategy while you're in that trade. Okay, you want to look at a high prop daily. Consolidation broken, where would you suggest to put a stop loss? All right, let's look at that right now, actually. High prop, ordinary shares, bang. All right, so this is high prop. So now if you guys will remember, the first one that we did was identifying the trend. So if we look at a couple of, like some data here, first thing that we can see is the trend is down, right? We have what do we have here? About 3 years worth of data. Well, I suppose, I mean, just from the start, it starts up here and it ends down here. So that tells me the trend is down, plus the primary trend here looks down. I'm just going to have a look at your question again. Consolidation broken, where would you suggest I put a stop loss? So which way are you trying to trade here, Mohammed? Are you trying to go long or short? I'd be careful. I mean, the trend is down, so I'd be biased to the short. But for me, I mean, here's a consolidation level here. I'll draw it in. So that was kind of like a consolidation level, right? I mean, that's a pretty easy one to spot. It broke out. It's kind of back inside of that. Here we can see was another level. We can even extend this all the way to there. So this has been a support level here. So I'd say my bias would be to the short side. If it finds a bit of resistance up here, I might want to be short this thing just because of the trend. But if we do manage to take out these highs, I might consider getting long. That would be my view on that. I don't know if that is helpful to you at all. Let's have a look at some more comments. Oh, right, suggested stop loss. If you were to go short here, your stop loss could be relatively tight. So you could maybe put a stop loss at the previous high. Well, if you were to enter short here, and that's your previous high, then your two previous highs ago would be up here. So that's quite a big stop loss. You're putting a 10 Rand stop on a short. If you are going long, it's hard to find a stop loss. Your stop loss would have to be underneath this level here if you're trading on the daily time frame. That's the safest way to do it. Anything tighter than that and you run the risk of being stopped out but still being right, which would obviously suck very, very much. But all right, let's get back to our presentation. So timeframes, are there any questions about that so far? I don't know. I just want to see, give you guys some chance. Okay, no. All right, so let's look at some practical setups. This is a nice setup, right? If you want to trade these types of things, let's look at Sasol. I know there was a massive multi-year range on Sasol for a very, very long time. So this is a range here, right? I'm going to move that over there because that's getting in my way. Bang. So this is a range here, right? So to show you an example of what we are talking about, or what I'm talking about, when the market comes up to this area here, we want to do a couple of things. We want to identify a, so now I can make this bars as well to make it easier for you if you want to see. But what we're looking for here is a confirmed top, right? A confirmed high bar. So here we have on either end lower highs than the high of this bar. And then we observe it for 2 more days and we have lower highs for 2 more days than this high bar. So this is then a confirmed top, right? It does the same here. And then we can also now see that this is maybe a bit of a consolidation. So we might want to then look at, let's just look at the date here, March 2016, in case we lose it. Then we look at a 1 hour chart. And we need to go back all the way to March 2016. Goodness gracious. It's a whole lot of data. I need you to load me. It's gonna not do it, which sucks really badly. Okay, so we need another example, it seems. But in any case, so what you could do is we were looking at this, right? You can see that it's got a bit of a consolidation there. Even it breaks out of this consolidation here, That consolidation would probably be like there, because there's your support, there's your resistance. So when that consolidation breaks lower, you can then enter into a short trade aiming for the bottom of this channel, I guess, support and resistance zone that it is trading in, or range that it's trading in. There it would have worked. Buying it sort of when it comes down to this area would have worked really nicely. Then later on, you can see every time it comes here, it bounces up. Now, it would have frustrated you endlessly here. I remember this day I stopped out. I was long Sasol on a much longer term view, and on this day when it sort of traded below there, I was like, it had paid it out a dividend, whatever the case is. I was like, this thing is gonna die, and I was wrong. But in any case, here we have a breakout of this range. Now, in order to trade this range breakout, what you do is you put your stop loss in the middle of the range, and you target the range high. So Sasol here was a bit of a fark, I think is the right word to use, because we would measure our high to be 37%, and then we, oh, goodness gracious me, we measure the range, and we would then want to move this range. Let's just use a Fibonacci retracement then, or let's just use a normal line. How's that? We'll use a normal line or an arrow. So we measure that with a sexy pink arrow, and we project that all the way out the top, and that would be our projected target on this range trade, right? With a stop loss in the middle of the range. So that is kind of like a nice 2-to-1 risk reward ratio kind of trade. But in this particular case on Sasol, it didn't work, and you'd kind of been stopped out, right? But it's a nice way for you to identify ranges. Now keep in mind, this is a daily chart, so we are looking at many months here, and this might not necessarily be, I mean, this range is absolutely huge. You might be interested in trading smaller ranges, or smaller, you know, not being a trade for the next 2 years kind of thing, but rather for the next couple of weeks. So this might not necessarily be a good example for you to trade. There are a couple of cool ones. If we look at Vodacom, for example, this is a consolidation that it's been trading in for some time now as well. So first thing we need to do is we need to identify the support and resistance levels, right? And if we use our fancy new methodology that we just learned, we're going to say, okay, cool, we are looking for support levels. One, is that a low bar or a low candle? It has higher lows, it has higher lows, so yes, we can put that as a level. We're going to put it on that closing line there. Sort of coming around this area again. That looks like a one, yes, okay, so we're going to put a line there. Once again, is that one? Yes, that is, but it already has a line, so that's fine. Is this one? Yes, it is, so we're going to put another line over here. Is this one over here? Yes, it is, so we're going to put another line. And you can already see that we're starting to form, you know, there's quite a bit of traffic in this area, right? So you can almost take these away and immediately kind of just draw in your box. Where is my box? And start drawing in your little support and resistance zone. Wait, not that big. We're going to do that size. Now, technically, this thing, the lows are here, right? That's your support zone, this area here. So now what you're looking for is a break of that area or a reversal from this area, is the two things that we are looking for. If we want to take long positions, we want to go long from here. If we want to take a short position, we want to break this support zone and then trade it lower, right? If we run the same process at the top, we're going to come up with this being around this sort of being your resistance zone. right? So now in order to identify trading opportunities, what do we need to do? We need to see, was this a low bar? No. Was that a low bar? No. So is this a low bar? We don't know. We have to wait till tomorrow to find out whether or not this is a low bar, because so far this is the one with the lowest low. So already this is kind of telling us maybe this is not the bottom, because we've got confirmed low bars all the way through up to this point, and now we are already sort of trading lower than what we have been here for the most part, especially where the market is closing by the look of these candles, and we still haven't made a confirmed low bar. So we wait. We suspect this is one. We wait for tomorrow. What we need to see tomorrow is higher lows than the lows that were made today. All right. If we see that, then that is maybe a confirmed low bar. We then switch to the Gann 2-day method, and we then have to observe for another day to see whether we once again get another higher low than what today's low was. And if that is then the case, then we have a confirmed low and potentially a setup to go long and maybe trade this thing up from wherever 120 to maybe 136 or 134 or whatever the case is, wherever it starts to find resistance. What we could also do is switch to a lower time frame and look for a consolidation in these support and resistance areas, right? So if you look, we get sort of into this area as a good example. There's a bit of a consolidation there in this area, and then it breaks the consolidation, trades down to the lows. Here it starts to consolidate in this area, breaks that, trades back to the highs. So now what we could do is start looking for support and resistance levels on a 1-hour chart in this area, and if we start seeing that it's starting to form a support and resistance zone in this thing itself, like it actually makes a little consolidation. If that consolidation breaks up, we can go long. If that consolidation breaks down, we can go short. So those are two different methods of identifying these entry points into the market. Right. I hope this stuff is making sense. I'm just going to check the YouTube comments. My charge is just broken. 50 SML. Okay. All right, cool. I love the conversation, guys. You are more than welcome to do this in the Discord chat. I'm going to put in a invite for you. How do I now invite people? You didn't use copy button. Click. Cool. I'm going to give you that. Please join the Discord. You are more than welcome to do that. In any case, alrighty. So the next thing that I want to cover with you guys, and we are nearing the end of this stream, is a way to track your trades. Okay, so what I have here is basically a very basic spreadsheet that I will make available for you guys to download, and it's got some data, in it already. Obviously, you can just delete it; it's not a problem. But basically, how it works, and let me just take you through it. What I've got here is you've got a brokerage rate. So you put your brokerage rate or whatever it is. This is based on 0.2%. Today's date, obviously, a margin rate of 10% per share. So if you are trading CFD, you usually put 10% margin down. And this thing is going to go and do a whole bunch of calculations for you. So you put your opening balance here as an example. You start with 100,000 Rand in your account. Okay. This is going to track how much margin you're using most of the time, so that you can watch the gearing, your approximate cash balance, so you can see when you're starting to get close to being, you've got hardly any cash left in your account, your approximate net profit or loss after fees, your current balance, your capital growth, and then your current exposure in the market. So this is quite nice to look at, because sometimes you have open trades and your exposure is way in excess of your opening balance, and then you're taking way too much risk. There are a few shortfalls to this thing. It is not going to work out your swaps, right? Your interest that you pay for carrying the positions overnight. You can enter them in here manually. I was thinking about writing a formula to calculate it, but that's a bit complicated, so just keep track of it manually. I reckon put it in every day. You can also put it in so that it tracks the live prices of the of your instruments, but it is maybe a little bit maybe a little bit of a mission for some, because I know different trading platforms have different ways of pulling data out, so it's not always, I can't make one sheet for everyone to use. So in any case, what we have here is we have a trade, a share code, or an instrument, whether it's gold or a currency or a stock or whatever it is that you're trading. Put your share in, the date that you opened the trade, the position, whether it is long or short, right? The entry price which you traded. It will automatically work out your exposure for you. You type in the position size that you put in, how many shares you are trading, and it will then, based on that, work out your exposure. And then your current price, you can update this at the end of every day, or when you close the trade, you put it as the level at which you close the trade, the number of shares you sold on the exit, obviously, because you need to close the position. Is the trade closed, yes or no? And the date in which it closed, then it will work out your profit in points or pips or in rands or whatever the case is per individual share. It'll show you your gross profit loss. It's going to calculate your brokerage based on your percentage fee. Note that if you have a minimum fee with brokerage, here I've sometimes put $50 or $100 because the trade is closed, 50 Rand each way, still open, 50 Rand just one way. Here it works out the brokerage rate based, because the trade is bigger than a certain minimum, so it covers the minimum brokerage rate. You can then enter your funding rate, and then it works out your net profit for you, current open exposure and current margin utilized. So to give you an example, what it also does is it pulls through to this little chart here, so you can see your individual charts, how you're doing. You lost 2 grand, lost 2 grand, made 2 grand, lost 2 grand, made 3, made 4, lost, made whatever. And then it draws a little yellow sexy equity curve for you as well. So to give you an example, we are going to take a new trade on Vodacom. We are going to take it on the 6th of Feb because we are legends and we can trade while the market is closed. Obviously, I'm being sarcastic. We are taking a long position. Where did we enter this trade? Just making stuff up here. 116 Rand. 116 Rand. And we took 1,000 shares. And we can see here that the current price is 116 Rand and 16 cents. So we are up 16 cents, or $160. The brokerage is 232 Rand for that trade. Our open exposure is 160 Rand on that position. We're using 11.6 grams worth of margin, and we can see this has changed our total exposure to 176,000, because we do have a few other open trades here. And this is now taking us to current exposure of 176 compared to our cash balance of 101,000 and our starting balance of 100. So we are 1.7 times geared here, which is a little scary, but I suppose not that bad. If we then select this trade as closed, it will do a number of things. One, you will see it will change the brokerage rate. It will immediately calculate that the brokerage has been paid on the leg out as well. But first we're going to say we are selling this at 132 Rand and 10 cents because we're amazing traders. We close the trade there, and we close this trade on like the 3rd of March 2019, and then we can see we've got a cool log in here where I'll have to add the formula to include the funding rate, because we probably would have paid 500 Rands worth of swaps on this as well. I'll do that this evening before I make it available for upload, and then it'll work out your current your net profit and loss on this, and it'll plot it. Note that this is not going to be 100% accurate because it does not reflect all the fees, but it is a nice way for you to track all the stuff, and you can always manually come and input your fees and stuff that you paid exactly, and it's a nice way for you to track it. There are a couple of things here. You can see local CFD seed data is your chart data, and this is where those trades are coming to populate. So that is what drives this chart behind here. If you want to increase this chart, you basically just include more of this data. If you want to include more of this data, you just drag it down and it will do so. Then there is an Aussie one, or for index one as well. Similar calculations. This one is just geared for sort of fixed margin things and Aussie contracts rather than CFDs. And there's another little sheet for its data as well. And that is a very nice way for you to track some of your trades that you do, so that you can keep track of where you're making money, where you're losing money, what you are doing right, what you're doing wrong, that kind of stuff. It makes it a lot easier when you know sort of where you are in the market. It's something that is very important. I think that everybody should do, is to track the trades and to log them, so that you can keep a record of what you're doing. The nice thing is you can also come back and you can put in comments here and you can say, I was a fool. Why did I ever buy this? So, you can write something like that, or you can write down the criteria that you use to get into the trade. You can potentially add screenshots to the trade setups that you saw, so that you can come back and you can study why you made the decisions that you made, and then see where there is room for improvement. Right, and that's pretty much my whole story here, guys. Let's look at some of your charts. We have from Chris 17 Cars in the Discord asks about Kumba. So let's look at the Kumba chart. What I'm going to do is I'm going to pull up the Discord over here, so you can see it. We have the chart that he is looking at, Kumba iron ore. All right, it looks very nice to me. You've identified your support and resistance areas, and is that a reversal? It very well could be. There's a couple of things driving the stock. Obviously, iron ore prices is definitely a factor. Also, the rand has been weakening a bit. I don't know where it is trading now. So I'm not too sure that could be a reversal. What we are looking for here, let's just have a look where the rand is, 13.56. So that's a bit weaker. So what we're going to be looking for here really is then to see on a lower time frame or a shorter time frame whether or not there's a consolidation and which way that consolidation is going to break. So to try and replicate your chart here on the daily, you've got, I just want to look at your chart, Kumba iron ore 1 day. We're kind of looking at the same area. I just don't have as many moving averages on it, and that's kind of the situation that you're asking for, right? So it does look like we have two sort of like a nice little reversal candle here, at least this one. This candle does seem to be a reversal candle or a high in the thing. So we have to observe the next few days, right, to stick to the 2-day Gann rule, or the Gann 2-day rule. But what we can do is we can switch to like a 1-hour chart, and then we can try and identify support and resistance levels here. So that is a support level. So we're going to mark it, and that is a resistance level. So we're going to mark it. And I would say if we have a breakout of that range, we could potentially have a trend continuation, or a trend reversal on our hand. Until then, such time we don't know. As you can see, this support level was resistance here in the past as well. So resistance becomes support, becomes resistance, because it's big key levels where big institutional players enter and exit into the market. So as we can see, this was resistance for a while. It's now turned into support. So it'd be quite interesting to see whether or not this area, and let's keep in mind it's not a definite level, it is more an area. So I'd like to sort of see this thing trade and close a 1-hour candle below 330 Rand before I would be comfortable to say that this is a reversal. Similarly, I'd like to see it close a candle above sort of this 346, 47 Rand level before I could comfortably say it is a continuation of that trend, because for now it's just stuck in a range, right? Just on a shorter time frame. So I use those sort of as my trigger points. Okay. The chart game. Dun, da, da, da. Okay, let's have a look. Looks like if you look at the weekly chart in Kumba, it actually looks like it's breaking out. Okay, so time frames are important here, because on the weekly chart it does look like it's breaking out. And also, ironically, if you look at something like SGL, Sibanya Gold, on a daily, sorry, I drew in some sexy things here the other day. I guess it doesn't really look all that similar to Kumba, but this kind of feels, this area here feels a little bit the same as what Kumba is doing, this area here, but I guess I am mistaken. Let's do, where is the chart game? Alright, let's look at Matume's chart. So he's got South Africa SA 40 here, calling for a pullback down to this level, then a rally up to that level. Okay, so that is the ALSI, right? So that is the J200 index, which is the South Africa top 40 index. So you reckon, Matume, that we see a move down to, what is that, 46,250, 46,250, followed by a rally back up to 50,000. All right, so I'm going to mark your levels, 50,000 and 46,250-ish. All right, I suppose it could be. I was looking at the Aussie future now. I had drawn in this. I'll show you what I drew in. And I was thinking that it's bearish. I had drawn in that. Well, initially not that. My chart initially was that. And I was like, man, this thing is broken. But now I don't know. What is interesting here is that it is it's not yet formed like a high bar, right? The more time goes by, obviously the more information we have to work with. But we have this little support level here. So we would need to see if this turns out to be a high bar. So if tomorrow is lower, and you know the US is down at the moment, they look flat actually. But if tomorrow turns out to be lower, and the day after that turns out to be lower, then today could potentially be a high bar, and then I think that it is possible that we come down to see your support level here, because you can see here also this is quite a significant level that you've identified, 46,250-ish, right? I mean, it's a zone, it's not a round number, but this could be quite a significant level, and the market could come back to test it. And as we see here, this has been resistance in the past, so it could once again be resistance. But once again, we wait for a confirmed high bar and or resistance point to see whether or not this particular time it's going to turn at the resistance level or zone. I just want to look at a 1 hour chart. You see how nicely it consolidates there, and it breaks that consolidation, cheers, all the way back down to the range. So maybe that is not a bad idea. Identify this range. I'm going to take these away, and I'm going to draw in. I'm going to draw in these to give us the idea of the bigger range, right? So this is kind of like, so if you look at the daily here, this is kind of that range, right? So we look at the 1 hour chart, and we now are looking for consolidations around support and resistance to give us triggers. So I'm just going to put that as there. So this consolidation that is forming here, okay, a bit of a fake breakout, whatever, but what we have here at least is a confirmed high bar. High bar, you've got lower highs on either end, and two charts or two candles forward. You know, it actually used to be three, so you could use three candles. It's a bit safer. It was in 1998 by Kriels or whatever that it was changed. It used to be three. Now they've changed it to two because, you know, markets move faster or whatever the case is. But you could use 3 bars is also a nice way of doing it. I just want to check if you guys are still with me. So in any case, yeah, so you could say that that is potentially a reversal. And you could maybe even enter a short position here. And if you are into candlestick analysis, that is a hammer. Eh? And you can see there was one there also. That is, well, not a hammer, a shooting star, inverse hammer. So that is a shooting star, not a textbook one. That candle needs to be lower. This red candle needs to have started lower. But doesn't matter. It's still sort of like a kind of shooting star situation. So this could be a nice short down to the bottom of this range. But what you want to do is you want to use this range as your trigger to trade the bigger range down to your target, right? And then once again look for consolidation there and trade it the other way, right? In order for this bigger picture to play out. But this short might be quite a nice trade. Also, don't be too biased on the short. Similarly, if this thing breaks up and it takes out that level there, because you can see this whole sort of area here is resistance, right? If it manages to break through this resistance area, close up and go, you definitely want to be long this thing. So don't be too biased in thinking that the order of events is going to be in the order that you want them to be. I am bearish, but I am not necessarily right, you know? So sometimes you just kind of have to suck it up and understand that you can't always be right. Let's have a look at this. All right, Nasdaq, March 19 4-hour candle. What are you showing us here? I see the Fibonacci retracement. 161. Where's 0 to 100? It's retraced. It's made a 50, so it should target then 150, which it smashed through. So have you got a sort of a target in mind here? What is the thinking here? I'd love to know. Let's just ask him. IFR. What's your thinking? What's your thinking with your chart? Okay, he's typing. Oh yeah, Discord, guys, it is legend. As you can see, there are a whole bunch of people here. Not a lot of them are online at the moment, but I like to think that they will kind of check in every now and then and see what's going on. Get 261 target. What? How do you get to? Oh, 261 target on the fib. Gotcha. Yeah, I think that's relatively likely at this point, hey? I mean, obviously it won't go in a straight line. It does look like we have a bit of a resistance. Viva la resistance happening here. There's a very nice high resolution chart. Very nice. Anyway, looks like there's a bit of resistance happening here. But, you know, from this perspective, that 261 level is like a stone's throw away. We've got a proper strong uptrend here. This, just keeping it in context of the information that we have, that would be your primary trend down, and this would now be a primary trend up, right? And then these would be your secondary trends within your primary trend, these little moves here. So if you zoom out, the picture might change, but given the data that you have access, or that we have access to now, it looks to me as if the trend is up here. The new primary trend is up at least. And it may find support and resistance. You know, also don't cling on to the fact that it has to get to 7099 or 7093.53 or it's not target reached. It might get close. It might shoot through by a mile. We don't quite know, but it does seem that this is quite a nice trade. You are, I don't know if you're long here. I'm guessing what you would have done is you would have seen this 50% retracement and you would have gone long the break of this 100 level with your stop loss at 50, and you just kind of ride it for 261. I mean, that is a massive trade if that is what you did. But yeah, I think that looks good. I'm gonna just check the YouTube here. Hey, when will you see the launch of lingerie calendar? Oh, Geo, you know, soon. I don't know. Maybe that's an idea. Little bear caps. Eh? That'll be quite nice. All right. Let's see. What's your view on emerging markets? South African ETF, MSCI, Brazilian ETF. Look, I mean, we can look at them. We can look at them if you want. Smart money institution. If you give me the tickers, then I can put them in here. Let's see if we can find them here, right? SA. There's gotta be. Let's see. There's a lot of different things that can be traded here, man. I tell ya. Options, exchange, traded CFDs. No, I don't actually know anybody who trades those. Equities. This is your Brazilian index. Come on, load. Oh right, it's on. It's under the wrong exchange, so I don't have data for this. I don't have data. I only can see the .jse stuff. All right, let's look at investing.com. The power of the internet. MSCI Brazil. Ultra short, no. Is this the is this what you're looking for? Is it me you're looking for? MSCI. Okay, so let's just, yeah, this is the MSCI Brazil index. So we'll just look at this. If it ever loads. In case any of you guys are wondering why I was asking the other day where I can find more RAM or put more RAM in my computer, this is why. It's not because it doesn't have a lot of RAM, but because it's running right now like a number of different operating systems, and as well as the streaming software. And the streaming software is really what kills. But in any case, I don't know why it's not loading. I tell you what. Oh, here we go. All right. Okay. All right. Okay. Let us look. First, familiarize yourself with the territory, I suppose. So this is the Brazil index from 2010. And it seems as though the trend is down. So maybe this may be a trend changing scenario, right? Yo, kan 'n man so sukkel. That's what I'm looking for. Alright, so that's kind of the approximate thing. So we could have a trend changing situation here where you now have a new trend starting here, right? I'm going to remove that one. That's on the weekly. That is on the weekly. On the weekly. So yeah, my thing would be with this, right? You could have this. This could be. Wait. All right, it doesn't have that functionality. I was like, man, just copy it. They have officially changed the way their charts work, or my computer has somehow loaded the ageist oldest version of this website. But this looks like new chart functionality to me. In any case, here we have what looks like a channel, right? Let's do that. Here we have what looks like a channel. So this could be an uptrend, okay? But will you have to wait for we have to wait for this level, this resistance level here to break. If that breaks, then maybe we see further upside. Until then, I have no bias. That could be a inverse head and shoulders, could, but it's not at the bottom of it. Well, it's kind of at the bottom of downtrend, but it's not really. So I'd ignore that. Don't quote me on that. So yeah, I don't know. I'd say this thing is approaching resistance. There's a nice consolidation against the resistance level. I'm going to take that away. And I'll take that away. There's a nice consolidation against the resistance level. Here we have a nice fancy support sort of zone. I want that line. I want it there. Here we have nice support. So I would be looking at this area and seeing whether or not there's consolidation and or a short trigger and or a break of this level. That's really sort of where my head is at with this chart. Absolutely. And the other one you said you wanted to look at, okay, Fed no longer tightening monetary policy aggressively. Okay, that is true. That is true. But the fact that they your last trade, I think. What? Think behind it. Okay, rands and cents. I'll get to that in a second. So the Fed no longer tightening monetary policy aggressively. So sure, okay, that is true, but also at the same time, is it maybe not a symptom of a weaker overall economy, right? Yes, emerging markets benefit, but Baltic Dry Index is trading at lows. It is interesting though to see that container volumes have gone up, but Baltic Dry Index is still very low. So that is a bit of a confusing signal. But I don't know, for me, I don't know. I think, like, yes, the Fed hasn't put up interest rates, and they've guided that they're not going to put up as aggressively as we once thought, which is all fantastic and wonderful for emerging markets. But at the same time, it's not necessarily indicative of a very good economy. Like, what worries me is, where is earnings growth going to come from? US equities have run really, really hard. And they've done that on the back of consistently growing earnings over the last decade. And they've had quantitative easing in order to do that, and to help them grow their companies. Everything was easy. You could borrow money really easily or lend money really easily, whatever, I don't know how to say it. You could get money from the banks at like almost no interest rate. You can go out and buy stuff, and it was really, really very accommodative conditions. And companies grew their earnings phenomenally well. And then when quantitative easing started tapering down, and eventually it was came to an end, we then saw the market get a bit of the jitters, and corporate earnings forecasts started being reduced. And then Donald Trump was voted into power, and he said, all right, guys, tax cut for all the companies. And bang, again, companies' corporate earnings are now up again, because the corporate earnings is basically the money they're saving on their tax bill, which again then boosts stock prices, right? Now, those tax cuts have been sort of worked into the system. US is at full employment. Wage inflation is not really like huge. So how are companies going to have double-digit sales growth if there's no one left to employ? Everyone's got a job. So where are the new buyers going to come from? People don't have more money because the wage growth isn't that high. So this corporate earnings issue is what bothers me, and I think that might be the reason why the Fed isn't putting up the interest rates. Not because they're going to lead us to this rip-roaring bull market, but rather because they're afraid that if they don't put up interest rates, there's going to be trouble. I mean, if they do put up interest rates, there's going to be trouble. So I don't know. It's an interesting debate. It is a bit of an interesting debate. The other one you wanted to look at was 50 S. No. Sorry, I'm trying to find it. It's basically the MSCI South Africa one. So it's the same as looking at the Aussie, really. We were looking at the Aussie earlier. I hope that satisfies you on that question. Last trade that I did, rands and cents of my thinking. So where did I put it? It's in the Discord. So the last trade that I did was oh wait, hang on. Let's just see here. Okay, I see you. I'll get to you. Where is our chart game? Our long from 61 on the fib level. Okay, so long from here. Yeah, that's a colossal trade, dude. Well done. What was the thing? Oh, yeah. So that's why I had the Discord open. So the last trade that I did is really it's like a pair trade. So it's really kind of boring. Research. Ta-da! So I put it here. What I did was, and I'm just opening it in here to show you guys how this whole thing works. So what I did is I did a top-down sort of analysis of the J212. And as time goes by, I'll do more of these sectors because it's really helpful to do them. So you look at the sector and you compare it to the top 40 and you see whether or not that sector is out or underperforming the top 40 index, right, as a benchmark. And then I looked at sort of like, so then you sort of start going through them. You see Standard Bank is outperforming, and I've put the weighting in the index in. Firstrand is underperforming, and so on, right? Sanlam is underperforming the index, outperforming the index. ABG, which is Absa Group, is outperforming the index, and that is basically I'm using an indicator here called a relative strength comparative. That's this indicator at the bottom, and it is comparing the index to the stock, or the stock to the index, and then on that I'm putting an 89 moving average, and I'm saying that if my relative strength comparative is trending in a direction above the 89 moving average, it is relatively outperforming the index. Because this is the relative performance versus the index, and it measures that relationship. So I'm trying to measure the trend of that relative performance by putting a really kind of slow moving average on it. And if it's above that moving average, I'm saying like, okay, it's trending in a relative strengthening outperformance over time. My phone is ringing. So that's why I'm using that moving average, right? It's using that as, sorry, Letitia, Andrea, Mom. Can't take that call right now, man. And that's what I'm using as my indicator to whether or not it's outperforming or underperforming. So you can see Absa Bank here, or Absa Group, is performing really well, all right? As where Firstrand, for example, Firstrand over here is performing like relatively poorly. Kind of came back for a round two, nah, can't do it, okay? So what I've done is, based on this analysis, at the bottom here, I said the best short setups appear to be RNI, Discovery, and Firstrand. So I shorted Firstrand and I longed Standard Bank as a pair trade, basically. That was my thinking. So it's a very lazy trade that I don't necessarily have to sit and monitor all the time. So I can do other stuff. I can day trade. I can make content, whatever the case is. But it's still a relatively safe trade, and I seem to be doing okay for now. So we'll see. Basically, it's a slightly longer term idea, and I'll monitor it as time goes by. All right, yeah, guys. I think. Any other questions? Let's check the Discord. Any other questions? Oh yeah, there was Amatola. Let's see. MMI Daily. Is there a trade? Not yet, Amatola. I would say, I don't know. That's not enough. That's I need to see more. I need to see more. MMI.JSC. See, this chart will pull. Ta-da! Okay, this is a downtrend. Welcome to it. Eh? If you've ever wondered what a downtrend looks like, that's it. Well, I suppose enough data, it's an uptrend, right? But for me, 2015 to 2019, you know, that's a long enough period to say that this is a primary trend and she is down. So what we first want to do is identify potential support. The first thing that kind of stands out to me here is this. Is that level there, right? Let's make them big. Let's make them big. Cool. Sorry, I chew things incessantly. So I would watch very, very carefully for a reversal of this level, because you could even have like a triangle scenario, right? Potentially. But I would also say that a break of this, okay, it's not exactly a perfect support level. You could probably be, if we want to be a bit more textbook with it, we would put in this box, right? Because we can identify a number of support low bars. There's one, there's one, there's one, there's one, there's one. Now this, the question is this one yes or no, right? So we have to give it a couple of days. If this turns out to not be a low bar, and we do manage to get sort of below, I'd say below the real bodies of these, or maybe even a bit lower, I'd say there could potentially be a short in here. And the reason I would be looking for shorts rather than longs is because the overall trend is down. We could also say that we have a channel or a range between there and there, but to me that feels like a high risk game here. I think that the bias here is short. I think we're going to need some sort of a fundamental catalyst to turn the story around. I don't quite know what the deal is, what the latest news and news flow and stuff around MMI is, or what the balance sheet looks like or anything like that, income statement, I don't know. But maybe not a bad idea. I mean, if there is a long-term turnaround in this thing, you could be buying it on a very significant support level. Look at that. Let's do that. Look at that, baby. So this is a big level to watch, I think. Well done. Actually, thank you for pointing this out. This is a very big level to watch. Maybe not so much as an individual level as we've seen, right? But rather as a general zone, right? I mean, that's a big area to keep an eye on, but it could be a potentially very long-term trade. So yeah, I don't know. Look for a reason to be long. Although breaking out of this at the bottom end of this would be somewhat bearish if you ask me. I think that maybe we then go down and test these lows here, which isn't that much. I mean, it's only 60% down, or thereabouts. So yeah, more like 40% actually. Okay, cool. Is it advisable to buy South Africa stocks with so much political uncertainty at hand? Yeah, it depends, hey. Smart money institution, it depends. It really depends on what your outlook is. I think if you have a long enough time horizon, you should be okay. There is a lot of political uncertainty, but there is also a saying that Jesse Livermore once said that a bull market climbs a wall of worry. So, you know, we're all worried, but the world hasn't ended yet. And it's come close a few times. I remember there were movies in 2012 about how it was the end, but, you know, we're all still here. So, I don't know. I think what you have to try and do is, and this is the beauty of technical analysis, right? You can ignore the news and just focus on the charts. If you want to look at the geopolitical risk situation, there are safer markets to invest in. Sure, yeah, absolutely. there are frontier markets to invest in. There are things that you can invest in offshore. For example, I really like the idea of buying coffee. I think that is a wonderful trade for the next couple of years. I also think that there's cool stocks in the UK and the US to buy, particularly in the space of pot stocks and or really groundbreaking technology stocks. So it depends on your time frame. It depends on your risk profile. I don't think that there's one answer that is good for everyone in that aspect. But all right, guys, I think that is going to be it for now. I was really kind of hell-bent on keeping this video to 1 hour. I will upload the spreadsheet for you guys if you want to use it. I'll put a link in the little section below the video for you to click, and then it'll download, and I'll also put it in the Discord channel so you guys can get it there. That is it from me for the evening. Maybe sort of one round of final questions if there are any, but it doesn't seem like there are. So that is it. I hope you have found value. If you have, like the video, subscribe to the channel, and tell all your friends, because I'm going to be doing this every week. Yeah, and let me know what you want to learn, guys. Let me know if I waffle too much. Give me feedback. I need it. I love it. And until then, trade safely. Actually, I was going to say happy trading, but whatever. Keep it tidy. Keep it. Stick to your stops. Don't break the rules.